You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Old trading walks into a bar. New trading raises it. Unlike some guys, Tasty Trade puts traders first. Maybe you're the type to hunker down on your desktop for hours. Maybe you breeze by on your browser. Or maybe you just need that top-rated app right by your side. However you do it, Tasty Trade's got the advanced tools you need to tackle stocks, options, futures, and more, all in one place. Chart your heart out with over 300 indicators. See opportunity differently with interactive curve analysis. Use backtesting to learn from the past and plan for the future. The platform is only the beginning of better trading. You'll also find low pricing, lots of education, and backup from a support team that really gets how traders trade. It's no wonder Investopedia named Tasty Trade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/podcasts and see for yourself. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody, that music means we are back once again. It is time to talk some vol for the second time now in the new year. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which all of you folks were binging and mainlining last year. Thanks to all of you out there who downloaded, streamed, subscribed, listened, rated, reviewed, all the things you folks do. It enabled us to add 2 more shows to the ongoing litany of content coming at you on the network. Yet another reason why, if you're not subscribed to the full network, you're missing out. And again, if you're not hanging out in the pro, you're going to be missing out on the vol side pretty soon, because we are coming up with our vol deathmatch 2.0. Yes, 1.0 was a big hit. We thought we got to do it again. This time we got the Flowmaster and Scott Nations entering the arena. 2 men will enter. Only one will emerge victorious. Who will it be? You'll have a chance to shape the outcome. The optionsinsider.com/pro is the place to go to learn more, as we learn who's joining us for this second official episode of 2026. First, we go out to, I don't know where he is. He has real estate now all over the country. He's a real estate mogul, none other than the once future and present Dr. VIX, a.k.a. Mr. Russell Rhoads, joining us for the first time here in the new year. Mr. Rhoads, Happy New Year to you, sir.
Happy to be here. Apologies about last week, but closing got messed up a bit in the space that I'm sitting in now. And so, yes, today I'm in the western suburbs of Chicago. I'll tell you on that volatility deathmatch, if we want to start a Kalshi, I'm going with Scott Nations big time.
Oh, you think he's going to take it?
I would never want to debate with somebody in a forum like this who appeared on Jeopardy.
Appeared on Jeopardy, I knew you were going to say.
Yeah, I knew that was coming. There you go.
We'll see. You're underselling the Flowmaster there. I don't know. Should be an interesting one. And then also joining us to kick off the Vol New Year, beaming in from the Southern Volatility Mecca known as Austin, the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com.
Hey, Mark. Happy New Year to you. Happy New Year, Russell. Happy New Year to everybody listening. And now that we got that out of the way, can never say it again. I think that's going to be my last. Happy New Year.
Oh, this is your cutoff? The 9th is your cutoff?
I believe the 10th is when things should be cut off. So maybe I run into somebody later today. But after the 10th, it's a if you haven't seen them in the first 10 days of the year, they're not important enough to.
What if you don't see somebody till like March 15th? That's it. You're just out. No Happy New Year. None of that.
No, no, of course not. Say Happy Spring, maybe. Happy New Season.
That could be a fun
equinox.
That could be a fun flash poll to do along with the show as well. What is your cutoff for Happy New Year? Didn't Larry David have an infamous one? It was like 2 weeks and that's it. And beyond that, it's offensive. But we don't have time for that this week because we have another hot poll burning up the Twitterverse. Let's get there now as we get into a little bit of the old volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody. That music means it is time once again for the Volatility Review, the second Vol Review of the hot new year that is 2026. And of course, the end of the first full trading week of the new year. And coming into the end of this first full week, seems like the folks liked the jobs number, maybe not the jobs number itself, but really more of the unemployment side. Not quite the dumpster fire people were expecting. So that's leading to a little bit of green on the old screen today. S&P up about 0.6%. Dow up 0.4%. NASDAQ up almost 0.75%. And VIX cash, after flirting higher earlier in the session, coming back down to about a 1460 as we're kicking off the show. Puts it down about 0.4 point from where it was this time last week. Our old pal Volley hanging out right around a 12 even. That puts it down about 0.5 point from last week. And VVIX was at an 87 when we kicked off the show. Down about 6 points. We'll get to all of that fun in a second. But as I said, this is our first time checking in with both of our compatriots here to kick off the new year. If you want a crazy deep dive into all the stats, the highs and lows of 2025, make sure you check out the episode we did last week with our good buddy, Mr. VIXologist. We forced him to do his end of year breakdown a lot earlier than he normally does. So that was a great episode. Make sure you're checking that out. But I want to go around the horn with everybody first, get their thoughts, their takeaways from the mad vol year that was 2025. Mr. Meatball, I think we will start with you. When you look back on the mad vol year that was 2025, sir, what really stands out? What resonates to you?
Well, I mean, when you look back, what's interesting about 2025 is not the highs and the lows, because I don't think we saw any crazy explosive high-end VIXs. What was the high of the VIX for last year, Russell?
60.
But was that overnight though, or was that internet?
Well, it's funny because I just pulled up a weekly chart because I was looking at a couple of other things, and back in April when we had the tariff tantrum.
Yeah, it went to 60. That was I think the internet.
That was so short-lived, and it seems so long ago. It's like you're saying, the second half of the year. We had a couple of spikes, but it wasn't elevated. It's like an anomaly as opposed to that representative of the year.
I do think that 60 took place overnight, and that the real interday high was maybe 39, something like that. But the point is we didn't have any major vol events, but the median VIX level was well above normal, right? Traders will tell you, the headline number that you always hear from VIX is, the average VIX is, 19 or 18 or 20, something like that. They love throwing that at you. What traders really pay attention to is the median. How often is it trading 11, 12, 15, 18? right? VIX historically trades with a 12 more often than any other number, right? And then 13 is, I think, second. And
can I throw a fun stat in there while you gather your thought? Over half of VIX closes have a 14 handle or lower. I think that one really makes the point that you're trying to make there. Sorry.
That does make the point. Over half of all VIX closes are below 14. All right, or 14 or lower, excuse me. This was a year where that median VIX, like where it was trading, stayed in the 16 to 18 range way, way more consistently than I'm used to and have been used to. So it wasn't like an out of bounds crazy volatility year, but it was a year where options got reflated in the back end. And I've got two ideas as to why that is. All right. One, the introduction of zero DTE options allowed traders to kind of own longer dated premium, the stuff the VIX was going to pick up, and then pay for it just by absolutely decimating 1, 2, 3, 7-day volatility. And so I think if you looked at how steep near dated options are relative to 30-day options, it would shock people. Two, we had a consistent smattering of small events. We didn't have anything crazy, right? We'd have Trump said this, Trump said that, or this event is happening, or the Fed is pivoting up, the Fed is pivoting down. I mean, there were these events that are not like game changers, but are enough to kind of raise volatility. And back half of the year, we had a lot of uncertainty around interest rates. And I think that was the other piece that kind of drove markets. So from a volatility perspective, the cost of options to hedge out 30 and 60 days on the norm in 2025 was well above normal. And I think that's kind of my big takeaway for the year.
All right. Fascinating stuff. We'll get to this week's stuff in a second. But Mr. Rhoads, I want to give you the same opportunity. Again, you missed the big deep dive last week. I know you were busy crunching a lot of data, I'm sure, on the mad vol year that was 2025. When I ask you that same question, sir, when you look back on last year from a vol perspective, what really stands out and resonates to you, sir?
It seems like every week until just the last three. So every week over the last 52, except for the last three, the VIX high has been 16 or higher. And it felt like almost every week there would be this little whack-a-mole situation where at some point during the week we'd get a quick VIX move to the upside, and then it would come back down very, very quickly. You'd almost if you went to the bathroom, you might have missed the trade, and that seems to have started to come to an end, and that's one of the reasons that we haven't seen a 16 handle in 3 weeks now. So I feel like the amount of on edge that we had going, we made it through 2025. Everybody expecting a shoe to drop all the time. Don't know what's going to get tweeted next. Is he going to say something that gives us a 15 or 20% sell off very quickly? And as that as the tariff thing gets farther and farther and farther in the rearview mirror, I think that the anticipatory nature of VIX has just diminished big time. I need to lock myself in a room for about 3 or 4 days and try to come up with a factor model that incorporates how much of what VIX is saying is anticipatory and how much of it is reacting to what's going on in the market. I know they did that VIX index decomposition at SIBO, and I got that paper all marked up in front of me. I want to try a couple of different approaches with that as well. But last year, the average for VIX, almost around 19 or so. The long-term average is just under 20 now. And VIX was actually typically VIX is at a discount relative to European volatility. And this past year, it was at a premium relative to it for most of the year. That relationship has flipped over the last month or so, going back to some normalcy. So if you take a look at how VIX acted in the last couple of months of 2025, even with us, and I'm incorporating the last few days into that as well, just looking forward into 2026, you'd almost think that we're getting some sort of weird all clear despite everything else that's going on in the world.
Yeah, Russell, you know what was kind of interesting is the amount of times we had kind of the ramp up on. I was looking at like returns of hedges, and the weekend did not pay off at all in 2020 in 2025.
Not in the second half of it, for sure.
It was crazy. Yeah. Like we'd have these moments where it looks like, oh my gosh, the market sold off big on Thursday, sold off big on Friday, and then on Monday we'd come in and boom, it's higher. There was this weird pattern where almost if you bought VIX middle of the day, end of day on Monday and sold it Thursday or Friday, you were in a position to actually do pretty well. If you did the weekend trade, which should work.
Yeah.
It should.
Yeah, two or three times a year it should work. It worked once.
It just didn't. Yeah. It didn't.
Look at this past weekend. Is there a better example of that than this past weekend? Yeah. We actually seized a foreign leader over the weekend, and Vol could not have cared less.
Yeah.
You got smoked on the weekend Vol trade on a weekend when we snatch and grabbed a foreign leader. I mean, that's just absolutely wild stuff. But
to be fair, an illegitimate foreign leader.
Sure, yes, sure. But still, we got boots on the ground in a foreign nation over the weekend, and the vol market couldn't give an F. It's that kind of year, listeners. And it was that kind of year last year as well. Another thing we talked about a lot last year, which didn't really get a chance to get to on the show last week with Jim, was just this thread that really started heating up around the middle of last year of what was the real fear gauge. What was the real sentiment indicator last year? Because that was around the time that gold was really just lighting the world on fire, and VIX could not be bothered to get out of bed. And everyone said, wow, this seems to be a pretty sizable tonal disconnect between what gold is telling us in terms of overall sentiment for the economy and everything else versus what the quote-unquote fear gauge is telling us. And that's a debate that continued throughout most of the rest of the year. So yet another element of the vol landscape last year that we didn't get a chance to mention on the show. We should probably put out a link for you folks to submit your own themes for the vol year that was. Let's get out to this week. What's going on this week from a vol perspective out here, listeners? And like we said, it's an interesting tail end to the first full trading week. Vol once again doing its dance to the dark side. Mr. Meatball, what's catching your eye this week on the vol front?
Well, as Russell said, they, coming out of the new year, they're coming for it. And, we have not seen a lot of, I haven't seen the market kind of appear to be truly calming down and taking a breather and resting in some time. And this appears to be some of that. Option prices kind of dying, movement is coming down, right? Like realized volatility, average true range starting to really come off. Leadership from the non-Mag 7, I think, is really, the 492 or the 491, whatever you want to call them. The fact that those are really starting to perform. We've got strength in the Russell. We've got strength in the Dow. And some of the money is coming out of your Apples and your Microsofts and your Facebooks. That's leading to, I believe, lower volatility, lower movement. We're seeing correlation, I think, start to, at least between the top end and the bottom and the rest of the market, we're seeing correlation start to kind of fall. And those are all good reasons for the market to kind of have a lower volatility because, you get tech down some, but you get industrials up some. You end up with a S&P that is moving 0.5% or less a day on a lot of days. I mean, even here on a Fed day, we're up 0.6%. It's not like it's not like we're breaking the walls down or the ceiling. We're not blowing through the roof. So, the market looks like, I would not be surprised if we saw our first 12 handle in. I mean, Russell, when was the last time we saw the VIX close with a 12?
Oh gosh almighty.
It wasn't in 2025.
It wasn't last year, that's for sure.
Keep talking and I'll have an answer in just a second.
Yeah, I want to say it was like late 20.
12 handle? 12 handle?
Yeah, close.
Okay.
I want to say it was like late 2024.
2024 in June we got there. We closed 12 and a quarter, 12.92, May of 2024, June of 2024. So looks like that was it. We flirted with it in December of 2024 we got there as well. 12 and 3/4. So
December 6th of 2024.
Yeah. So a little bit of seasonality.
So,
I just happen to have the close numbers up, so I did an Excel thing real quick.
I think we might, there's a decent chance that if things stay this way, we could see that happening. If oil and banking and industrials are going to be strong and tech doesn't sell off, but it just kind of flounders, that's your recipe for low vol. That is the perfect recipe for low vol.
Can I just say, as a sentiment indicator, we're having some technical problems with our big crystal ball question of the year contest, which Twitter keeps choking on right now. But when it was live for a few minutes earlier in the show, the first submission we got for end of year VIX was like a 10 handle. I think it might have been 10:01.
I don't know about that.
That just brought a smile to my face. Literally hot out of the gate. He had to be first, and he was like 10:01.
Love it.
That's an interesting level. Maybe that's a barometer for where we're heading this year. Can we hit a 10 handle, listeners? Dare I say it, below a 9 handle? Man, ooh.
We had a 10 handle on 8/8/2018 last.
Look at you coming with the fact.
If you guys give me just a second, I can do some quant. Man, I should go back to being a desk quant. I miss it.
Oh, there you go. Not too late, sir. You're already a real estate magnate. You have the desk quant to your things. But you had a thought about fixed income vol as well, sir. Going back to last year really quickly, that's something that Jim kind of shared on the show last week as well, that he thinks maybe going forward there might be a little bit more interest going on the fixed income vol side. If you have something you want to add to that, have at it. And then B, well, what is catching your eye out there in vol this week, sir?
No, I was just, there are all kinds of little old school Wall Street sayings. And I was listening to Bloomberg talk about credit spreads on the Magnificent Seven stocks and how a couple of them are somewhat concerning. In fact, they were including Oracle in there, saying that Oracle actually looks like they may have some financial difficulty. They also noted that the only Magnificent Seven stock that had a great 2025 was Google. The rest of them were up less than 20% or even down on the year.
Oh, Pshaw, less than 20%. What a terrible year.
Well, but that's relative to...
Yeah, I know.
The market was up about that much.
I got you. It just tells you what our frame of reference is now, right, for the Mag 7?
Well, and beyond that, it's more of, did they outperform? And they didn't. And we had a nice 15 to 20% year last year, and I think it was better in the Nasdaq. But so those stocks, they didn't do as well as as they should have to get all the headlines that they get. But one of the other, so I heard an analyst talking about the Mag 7 and saying that you really want to pay close attention to the credit default swaps and the fixed income market on each of these stocks, because trouble may show up there, before it shows up in the stock. And I know that from trading Tesla back in the day, that you could see things happen with the Tesla convertible before it showed up in the stock. So there's something to that. And following that little rabbit hole there, it just occurred to me that you definitely, if you want a true financial market fear index, something that's really looking at everything, you want to incorporate the fixed income market. And we know that the MOVE index is one of the better ones in that area. I know CME Group has some of their volatility indexes as well. Just kind of a random thought that I sent in the chat to you two guys, just to see what you thought around it. Recently, what's been happening in the past couple of weeks. I kind of hit on it when we were talking about the long-term stuff with respect to VIX. We haven't seen a 16 handle. VIX hasn't been allowed to drive since it came home from college because it's been under 16.
There we go, listeners. Let's go out now to the realm of the futures. See what's popping off out there on the vol surface this week, listeners. And coming into the start of the show, surprise, surprise, vol's a wee bit lower. We have that Jan future off almost 1.5, actually slightly more than 1.5 handles right now. Feb future almost the exact same level, down almost 1.5 points as well. And let's go out to the far end of the curve as well. We've been looking at August for a while, so we'll keep it with August. August on the show right now is down about 1/4 of a point. Was right around 21.25 when we kicked off the show. So again, north of a 20 handles, you go farther out, but not quite at that 22 level we've been looking at before. Of course, tail end of the year, we are starting to talk about the political impact on the vol surface as well, which is midterms. We don't have that big 4-year election cycle, but we do have the midterms popping off. So that should at least give a little bit of dust up to the latter portion of the term structure out there. Mr. Rhoads, will go around the other way, sir. Anything catching your eye in the vol futures this week, sir? Besides the fact that last year was yet another dumpster fire year for VIX futures, everything else was explosive in the options and derivatives market, except for VIX futures down, I think, somewhere around 5%, sir.
Yeah, we still got like almost $1.70 premium with the January contract relative to spot. And, we're still looking at 20 handles out in May, June, July, August, et cetera. So, even though the spot, it's almost like it's wonderful that you can be right because you can say completely opposite things in a program like this. But the spot is indicating not a whole lot of concern, but spot also might be indicating that everybody's got their hedges in place because spot really is a function of what's going on in the S&P 500 index options only, whereas futures have a little bit more behavioral aspects to them. And despite spot being around 14.5 or so right now, we've got the January contract above 16. We haven't had spot above 16, as I noted, in 3 weeks. So we're a bit elevated relative to where I would think that we would be. It's difficult to do the year-over-year comparison because we were coming up on an inauguration, and I think that there were fewer days in the. I think that this time last year, the January contract may have been expiring the next week or so, but the curve was all 19 handles this time last year, and actually the curve was within about a 60-cent range across the board. That's a whole lot of uncertainty. What we're looking at right now with elevated futures, that is concern that despite everything looking pretty good in the world and the stock market continuing to behave quite nicely, that there may be some problems on the horizon.
Mr. Meatball, same question for you, sir. As you look at term structure for the first time in 2026, sir, what stands out to you?
Yeah, I mean, you've got a real nice contango on the front end of the curve, and VIX, even coming off weekends, not holding above 15. I think there's going to be some pressure on these futures. Back end, to your point, pretty flat, above 20. But nothing crazy. I'm a little surprised we're not seeing a little. You'll notice we've got some pretty nice juice from March to April. There's almost like a little kink there. And that's not surprising because the last 2 years, that April future has had quite the ride. 2024.
Did something happen in April last year? I'm not sure what you're talking about. 2024,
that April participated in the yen carry. And then 2025, what was that? That was the tariff tantrums, right?
Yes.
So back-to-back Aprils, we've had some action, and that not surprised we're seeing a little bit of a kink there. But I know we're going to talk about ETPs in a second, but the structure of this curve is very, very, very bad for your ETP longs. Let's just say that.
Are you saying April is the new Rocktober, sir, on the vol front?
It might be. I'd be interested to see. I mean, April traditionally was always kind of a low vol month, and I don't know. I think
never figured that out. But on average, April has been the quietest month when you go back over the history of VIX, and just never really. I mean, it's an earnings month. Yeah, I don't know. We've never really been able to figure that one out.
Heading into the start of summer, people are getting an early start on the sell in May trade in April. Just getting that done.
You know, I don't know.
Do we get Rosh Hashanah and Yom Kippur usually around then too? Because
we get often we get that Good Friday holiday, yeah. But sometimes it can be sometimes it can be in March as well. So I don't know. That's maybe first quarter earnings just nobody cares. Who knows?
There we go.
But yeah, I've noticed that for years, Mark, and I've never had a good excuse or a good reason behind it.
I think it's something around the high, it's something around that. And
I thought maybe tax season, but I couldn't come up with a good, maybe people are getting their returns and putting some of that money to work, so the market's got a little bit more bullish liquidity to it. I don't know.
The vol market conspiring to make April hot again, juicy again.
You know what? You don't have Rosh Hashanah. Excuse me. You don't have Rosh Hashanah and Yom Kippur, but Passover is during that period of time as well. Duh. Of course, Passover is. The two holidays are connected. So, those are two periods of time where markets maybe there's some of that, and then. There tends not to be a Fed meeting. We're coming right off of what is usually a pretty busy quadruple witching. Maybe some of that, but the last two Aprils have been rocking, and so keep that in the back of your head. Just long-term trends don't mean an outcome. Let's just put it that way.
Let's see what the outcome is in VIX options right now. Is it a banger day? Well, the answer is it's not bad. 377,000 contracts on the tape right now. It may not sound like a lot when we were putting up 1 million contracts a day. That ADV has come back to earth a little bit, as you would expect this time of year, down to 722,000. It's down another 46,000 contracts on the week. So 377 in that context looks pretty decent. It's also a jobs Friday, so you'd expect a little bit of action on the VIX options front. Looking at how the options are setting up to start the new year, what's open for size? Maybe this is indicative of what's to come in the year, listeners, as well. Because number 10, by the way, we're still hanging out at 8-2. That is kind of the standard structure for the top 10 in VIX land, something we pointed out last week. We were locked at that level for pretty much the entirety of last year, with a few notable exceptions. But really, 8-2 calls over puts is just kind of how we tend to hang out in the VIX land these days. But number 10 is a fun one, listeners. What does it cost you to break into the top 10 in VIX land? Cost you about 145,000 contracts. What does that get you to? Get you to the Jan Pars, the Jan 100. So we're kicking things off with a bang in the new year, listeners. Number 9, the, dare I say it, far more reasonable, 145,000 as well, of the Jan 20s. Maybe like that Jan 20 par vertical, listeners. Number 8, $1.59 of the Jan doubles, so kind of splitting the uprights there. Number 7, $1.67 of the March 50s. Number 6, 168,000 of the Jan 21s, another, dare I say it, reasonable strike. Number 5, $1.68 of the Jan 60s, so right back to the fun. Number 4, 175,000 of the Feb 47 halves. Talked about this on the show last week. There was that love affair with the 47 half strike in just about every month. Now it's obviously 1/2 of a ratio vertical. I think it was around roughly 1/4, usually 20 47 half, but just loved that the other half of it was the 47 halves. Talked about that last week on the show, listeners, if you missed it. Number 3, 204,000 of our first of 2 puts in the top 10 this week, the Jan 16 puts. Number 2, 243,000 of the Feb 35s back to the upside. And the big dog in VIXland right now, 261,000 of the Jan 17 puts. Interesting. So our old pal, the 15 puts, nowhere to be found. This might be the first month we've seen in quite some time where the 15 puts are A, not in the top 10, and B, somewhere near the top of the OI. Maybe people finally got tired. Maybe they listened to the show and they realize that was throwing a lot of good money after bad, and they're moving to, dare I say it, more reasonable puts, like the 17 puts. But you know what's never reasonable, listeners? But we do it anyway every week. Yep, it's Russell's Weekly Rundown.
Now, Russell's Weekly Rundown. Now, Russell's Weekly Rundown.
All right, Mr. Rhoads, what you got for us on this first show for you of the new year?
On it, and some good trades and some stupid trades, as always. Starting out on Monday, I don't get this. I feel like there are a lot of better ways to play what they've done here.
Should that be the subtitle for this segment? Russell doesn't get these.
I don't get this one. Well, there's another one I really don't get. But so on Monday with VIX at 1496, somebody sold 200 of the January 28 30 calls for 31 cents, and they bought 400 of the 60 strike calls for 9 cents each. That's a credit of 13 cents. It's funny that one of the reasons I was able to bark out the high last year was 60 was because I was looking at what the high was last year and assuming that maybe they were, that's what they were thinking. If we get a volatility event, that's where it'll go. Because the 60 price would be, it still wouldn't be pleasant, but they'd probably have some juice with those at the money 60 calls if we were to run up there very quickly. I just don't understand this trade at all. It's perplexing to me because I don't see. I even played around with what if we get the spike on January 15th and we're at 16 with implied vol, and looking back at what happened in April of last year, how would the trade work out? The only thing that I can come up with is maybe if we spike up above 30, they sell those 60 calls and hold on to the short 30 calls, that they're trying to do some sort of a version of monetization that we talk about. And this is not the only trade like that I've seen that I'm trying to get a handle on. So yeah, they're shooting for the 60 level there. On Monday, also somebody with VIX at 1482, somebody bought 200 of the January 7th, 17 puts for $1.83. That was definitely an opening trade looking at the open interest, and the settlement value was $2.11. It looks like they held it. So good trade into expiration. Also on Monday with VIX at 1495, somebody bought, and this is another one of those scratching your head trades, bought 100 of the January 14th 29 calls for a dime, sold 100 of the 30 calls for 8 cents. They spent 2 cents. If VIX somehow ends up above 30 between now and next Wednesday, they're going to look really smart on this trade. But again, there's a very specific outlook on that one. Tuesday, you guys are going to love this. VIX at 1479. Somebody sold 1,000 of the VIX January 7th 17 calls for a penny. About midday with VIX around 1479. I would really feel for these guys if we had some sort of overnight volatility event Tuesday into Wednesday's settlement. I almost feel like if you own, options and you can only get a penny for them, you're better off just holding them into expiration. And
at that point, what's the point?
It's a lottery ticket, and it's a lottery ticket. So I would have. I mean, they did the right thing, and I'm assuming that they had got something after commissions, that they weren't paying a penny a contract on the commissions. But I often, I would always teach when I was at the Options Institute to, if you've got a profit and you're happy with it, take those trades off, because VIX settlement can be a crapshoot. But on the other side of it, because we have seen some instances where we've crossed a couple of strikes in both directions overnight, it's probably worth just hanging on to it. Also, I think they're all skipping the 16 handle. On Tuesday, somebody bought with VIX at 1475. Somebody bought 1,000 of the January 7th 15 puts for 20 cents. They were worth 11 on the settlement. And then with VIX at 1465, this may have been the same trader. They bought 1,000 of the January 7th 15 puts for 28 cents. And again, based on settlement of 1489.
That's where all the 15 puts are. They're going up in the weeklies now.
Yeah, that's where they are. Excuse me. Wednesday with VIX at 1534. Somebody bought 1,300 of the January 14th 15 puts for 12 cents. That might end up being a pretty smart trade. I actually liked it so much I copied it in a way before the program. On Thursday with VIX at 1519, this is the trade that's blowing me away. I want you guys to perk up for a second. Somebody sold 6,170 of the January 14th 18 calls for 30 cents, and they bought 3,085. Basically, they sold 2 for each one that they purchased of the January 14th 21 calls for 13 cents. Credit of 47 cents there. You're getting a little bit of protection, but I've seen some of these these types of trades. I did even though I wasn't on the show last week, I did put together a weekly rundown, and I saw some other ones like this where they were selling more of the at-the-money calls or actually selling more of the at-the-money puts and buying fewer of the out-of-the-money puts as well. And that's just not how I would think about doing especially a ratio call spread in VIX. I would think about buying the lower strike and selling the higher strike, hoping for a moderate spike to close to the higher strike.
Let's just call these face rippers, because that's what that is, right? You're just asking to get your face ripped off.
And they've just been showing up, and they've been showing up in size in weeklies over the past few weeks.
Is it some sort of variance play that they've got something? Here's what I can tell you. I have now I don't know for certain, but I have very few doubts that there's not an off-floor trade against this. Oh gosh,
yeah.
And it's almost certainly puts them long vol.
Yeah.
But they want some sort of recapture if vol really takes off.
I think I'm going to be able to I think I'm going to be on the floor in the next week or two, and if I am, I've got somebody I want to go talk to about these. But yeah, that would be my guess too. Man, do I really hate not being able to just run downstairs and go, what's this?
Yeah, I mean, it could be it could be as simple as some sort of weird, kind of quasi VIX futures position they're writing income against, and then if things really blow up, they want to recapture.
Yeah, it could
my best guess.
It could almost be like one of those weird, we would do a ratio spread for a dividend capture trade. Yeah, I mean, so if they own, if they own, half as many futures as the calls that they purchased, that might have some that would make an awful lot of sense.
Yeah, so think about it this way with this setup. If obviously I don't know what they're doing, but I'm just thinking about it for many of you can imagine what a butterfly spread would look like, right? Now imagine a long call butterfly spread. Now just imagine that instead of the long call that's closest to the money, you replace that position with a futures position or a long volatility exposure position. That's kind of the position that you have created here. If you do have those, it's going to behave very similarly to a butterfly spread.
You're totally looking, and that it kind of it totally looks like that with the limit in your upside.
Yeah, so that's kind of my best guess of what they're trying to accomplish here. They just want the income instead of wanting the call, and they want the long futures exposure. And there's some advantages to that. I mean, if this thing starts to work late in the cycle, you're going to get a lot more reactivity out of the futures than you are going to get out of those call options. So but my guess is that somebody wanted to sell some variance, and that these guys are using this as an income play against that.
Mm-hmm. Regardless of what they have against it, they still sound much cooler if you call them face rippers. So that's what we're going to call them here.
They're face rippers.
Face rippers. Yeah. Trade your VIX face ripper. That'd be a good newsletter. People will subscribe to that. The VIX face rippers out there. Anything else, Mr. Rhoads?
No, today, VIX, I just want to say February. VIX at 1534, somebody sold 600 of the February 4th, 27 calls for 45 cents.
Okay. Russell, I actually did a really good weekly trade. It wasn't huge. I wish I had done more of it.
What'd you do?
It was last month. I bought heading like the week, like December 12th or 13th, I bought the December 24th expiry, like 17 puts or 16 puts when we were high. And I think I paid a dime for them.
Mm-hmm.
And obviously those expanded. I was like super excited when I sold them at 65, and then super excited when I got to sell some at $1.20. And then so I mean, it was a great trade by me, right? Like my top end, I made 1,100%. Like no one's complaining, but there is some opportunity to play around those holiday dates, especially like on a year like this where that Wednesday expiration was the 24th and the 31st was the next one. There was an opportunity to play that. It doesn't come around, that's going to come around once every 6 years.
5 or 6 years.
Yeah, 5 or 6 years. But when that shows up, that is something I am going to play. So 52-year-old Mark is going to be buying those puts in 2030.
So yeah, put that on your calendar for next year. Yeah,
yeah, exactly.
Yeah, I bought and since we're sharing, I paid 65 cents for the 16 puts that expire next week, just before the show started. So I did a week. I was just looking at how steep things were. And I initially was looking at doing the ones that expire on the 21st based on that future, but then I looked at the ones that expire next week, and I'm like, I should just.
You know what? I'm a dummy. I can't say who this was, but I did get a text from a hedge fund manager saying they were buying VIX upside in April.
Wow.
Uh-oh. There we go. He's down for a little bit of face ripping action.
Is that when we're gonna, is that when we're gonna finally find out what maybe the future is with the Fed?
Might be.
I believe so, yes.
So I think we all need meeting, I think, is May, but we should know something by then.
I think we all need some face rippers for the April cycle, listener. Were there any face rippers going up in VIX options this week? Not really a banger week for VIX options, you might imagine. Today, like I said, 377 on the tape. I'll just do some quick rundowns here because we got to get to our big crystal ball payoff for last year as well. The hot option today, 54,000 of the Jan 20s. If you're wondering what's a 20 going for, right around 29 cents. So if you think that's a steal, head on out there. Yesterday, the big dog, by the way, 633,000 contracts going up yesterday. The hot option out there yesterday. Almost 40,000 again of the Jan 20s. They were 39 cents yesterday, so you can kind of see how that's been working out. Wednesday, 582 on the tape. The hot option on Wednesday, 46,000 of the Feb 25s. Average price for those, nearly $1, about 95 cents. Tuesday, about 500,000 contracts on the tape. The hot option out there, 24, almost 25,000. Of the Jan 16 puts, 78 cents for those bad boys. And then Monday was one of the bigger days of the week. Yeah, it looks like, unless today really lights it up, it will be the biggest day of the week. 731 on the tape for Monday. The hot option out there that day, 38,000 of the Feb 22s. Feb doubles, $1.27 if you're wondering what they're going for. What SVIX is going for is a little bit more than it was this time last week, hanging out right close to a 25, about a 24.90, up about 0.3 of a point. Putting up some volume today, finally, 7,200 contracts. The ADV is about 3,900, so it's nearly 2x its ADV, which is a good thing to see. And UVIX 535 down about 0.15, putting up 43,000 contracts. The ADV is about 41, so already hitting their ADV there as well. Let's just run through the rest of them. UVXY 34 even. It's off about a point from this time last week, putting up about 28,000 contracts, which is almost a day's worth of volume there as well. And VXX at about 25 3/4 right now, down about a third of a point from where it was this time last week, putting up 33,000 contracts against an ADV of about 35,000. Mr. Meatball, I know you've been hanging out in the ETPs. What is catching your eye out there this week, sir?
Well, as I hinted, that term structure is poison to these things. So if VIX stays here, they are going to have a very, very bad week next week. And through expiration. So until we get some sort of uptick in volatility, I think trying to buy these things other than to maybe own some puts, you might be able to, there might be some edge in some puts on those ETPs. I got to play with it a little bit, but there might be.
Mr. Rhoads, anything catching your eye in vol ETP land, sir?
Nah, nothing really. It's, we've been frustrated with UVIX for some time. Again, I do think that we should have a couple of weekend volatility events and then, in 2026, and hopefully that thing will right itself a bit. So
we shall
that's all I
see.
can say about that.
As we also see, listeners, who, if there were any, were the winners of our 2025 Crystal Ball contest. Here we go.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, let's get down to business. It is that time a lot of you have been waiting all year for. We've been busy crunching the numbers behind the scenes, listeners. Been a lot of data on the show today, not just on the vol side, but tabulating all of your responses to our annual VIX Crystal Ball contest. Who can enter the Hall of Fame this year? Are there any winners? It's a challenging thing, listeners. You have to get end of year VIX closing price within 1/10 of a point. That's wild. You have to do it a year out. It's a challenging thing. This time a year ago, we actually had a winner on the network. Steve Sosnick nailed it almost exactly. Then we had two winners in the audience with an honorable mention. It was Cozy Coconut and Nico. And then we had an honorable mention for Bearish Account. Poor guy was 0.11 away. So he just came just outside of it. But we thought that was close enough to at least give him an honorable mention. So those three are in the Crystal Ball Hall of Fame for 2024. Did anyone join them for 2025? Drum roll, please, editors. All right. Were there any winners? The answer was yes. There were 4 winners last year, which is absolutely wild. 2 from the audience and 2 from the network. The network, by the way, VIX Cash went out last year, listeners, $14.95. We discussed this with Jim on the show last week. Sometimes a contentious issue. We did settle on $14.95. I don't think anyone took umbrage with that. We gave them a week to take their umbrage if they wanted to. At that level, listeners, our 2 winners on the network were Dan Gramza coming in at an even 15, and then Rich Excel going with the Columbus appropriate $14.92. So they both crushed it. 2 new entrants into the Crystal Ball Hall of Fame for 2025. So congrats. I just talked to Rich this week and Dan yesterday. So wild stuff. They were both on the network this week and they both won. So congrats to you. And on the listener side, we had 2 winners as well. So congrats. Thanks to all of you who played. The winners on the listener side were Go For Thomas. He was at a 14.97. And I like this handle, Ubernaut. Ubernaut was at a 14.90. So both of them within our 1/10 of a point margin of victory. So you will both win a fabulous prize as well. It's got to be something cool. We've typically done a $600 value prize for each of our listener winners, which is, of course, a full year of membership to our pro. We go big or go home. You folks knock it out of the park like that. You got to get something cool. So our producers will reach out to both of you, Go For Thomas and Ubernaut, tell you how to claim your fabulous prize. Were there any only other ones in our guesses who even had a 14 handle, weirdly enough, were Vernon Griffin at a 14.38 and Mr. Meatball, your palindromic nonsense at a 14.41 was at least respectable for the year. So there you go. What are your thoughts? We actually had 4 winners, 1/10 of a point of VIX a year out. Isn't that wild?
I mean, I knew it. I mean, I was, I had called that. I could have told you that I was going to be close to the best of our hosts, back in 2020, 2025, January 2025. I knew it.
Yes.
He was confident all year.
Yes, clearly.
It's like them Hoosiers in the football game tonight.
Yes. All right. Now I've got more palindromic nonsense to spit at you guys today.
Yes, I'm looking forward to it. By the way, listeners, this is normally when we have our poll for next year go live, and you can start submitting your questions. For whatever reason, Twitter is having a fit today. It cannot handle our question. So we're going to wait a little bit and probably post it maybe later today or hopefully over the weekend. So don't worry, you will have a full week like last year to get your guesses in. And you too can win the $600 value prize and more importantly, perhaps join the Crystal Ball Hall of Fame. We now have 7 names in our Crystal Ball Hall of Fame, plus an honorable mention. So, man, I never thought we'd have that many. It's a challenging. I kind of helped this year that it was close to an even level, but still, absolutely wild stuff. Speaking of wild stuff, as we're coming into the end of the show here, listeners, we are seeing most of the market still in the green. S&P up about 0.75%, Dow up about 0.5%, NASDAQ up about 0.93%. And let's get our precise level for Mr. VIX, 1455 out here for VIX. So that puts us both, myself and Mr. VIXologist, on the show last week. And neither of us had a 14 handle. I was at 1635. Jim was at a 1551. We were both feeling a little bit more vol. That obviously did not come to pass. So I will not go first. Gentlemen, I will let you, if you want, you could mull over and give me your end of year guesses next week, not this week, but whatever you want to do. Mr. Rhoads.
No, I got it. I got it.
All right, go ahead.
Yeah, well, so here's the way things are going to happen. Overall, I believe that we're going to have a less volatile year than we had in 2025. And in terms of, we'll still see some vol spikes, but the overall median volatility is going to be back in the 14s. And so, my guess is that coming, as we head into Christmas, you're going to see the VIX in the 12s. And then as we come out of that holiday, you'll get a little pop on 1/31/2026, 13/31.
That's where we're going out. 13/31.
Yes. 13/31. Write it down now, folks.
All right, there we go, listeners. And then what's your guess for next week?
For next week, 13/31.
How did I know? Oh, gee. All right, Mr. Meatball. If folks want, he's killing himself. Listen, he's falling off his chair. He makes himself laugh so hard. But Mr. Meatball, if folks want more of this type of in-depth analysis, where should they go? What should they do?
Yeah, we've got a YouTube channel. We're up to 6,000-7,000 subscribers. Come and check us out. Just Google or search Option Pit on YouTube and you'll find us. Or you can follow me on Twitter at Option Pit. And, every now and again, I'll drop something insightful.
There we go. Check them out, optionpit.com. You too can learn the method behind the palindromic madness out there, listeners. And Mr. Rhoads, I will give you the same choice if you want to do your end of year next week. And think about it a little bit, you can. Because our poll is not officially live yet, so the audience can't really play yet either. And then what are you feeling for this time next week, sir?
I'm playing.
All right. What do you and Gretchen have?
I'm first off, because it's the 250th anniversary of our union, I am going to go with 1776.
For end of year?
Yeah. For the end of the year. And it honestly, I was thinking a 17 handle already. Congress is going to flip and most likely flip in November. And let's just say the Democrats seem very upset with our current president. I think you're going to be hearing an awful lot of rhetoric that's going to have people on edge toward the end of this coming year. A little bit of a tailwind. As far as I just want to let you know that Gretchen picked 1524 for this week.
Can she go out? Can she go out that far for end of year too?
I haven't written a model for it yet.
That's what I thought. That's too much.
1484 for next week.
Oh, 1484. I think it's 1524.
No, what it said, using last week's number at the end of the program, it would have been 1524 for this week.
Okay.
I'm just letting you know what the guess would be. Since it's mechanical, I can say that. So it still would have missed. I'm not saying, hey, it said exactly where it is. But for next week, I'm looking at 1484. And I'm going to work on my model.
You go.
Because I hadn't won yet with it.
You go work on your model. I've been feeling a little bit more vol this week. That obviously did not come to pass. The jobs number taking the vol, not giving it this week. I'm going to look at, let's see, we're at about a 14 double this week. I don't hate somewhere around that level for this time next week. I'm going to say 1458. That'll give Russell little bit of wiggle room there, and Sebastian a ton of wiggle room for his 1331. All right, this is going to do us for Vol Views this week. We've been crunching a lot of numbers for your VIX crystal ball, so looks like Oddities will be at its normal time at 2 p.m. Central. So join us back then, listeners on the pro side, for the official after party of Volatility Views. And of course, while you're checking things out online, make sure you check out our friends over there at tastytrade.com/podcasts, the place to go to kick the tires and light the fires. We've had content coming to you now for 19 years, pretty much because of all the sponsors who help support the network. So give them a thanks. Check them out, all the different sponsors we have on the network. They are the reason you've had so much content coming to you for so long. More content coming to you later today, of course, the Hot Options Report after the bell. What will be lighting it up today, we'll find out. Then back again on Monday with another trivia battle until we're back again next Friday, another episode of Volatility Views. Stay safe out there, everybody.
Old trading walks into a bar. New trading raises it. Unlike some guys, Tasty Trade puts traders first. Maybe you're the type to hunker down on your desktop for hours. Maybe you breeze by on your browser. Or maybe you just need that top-rated app right by your side. However you do it, Tasty Trade's got the advanced tools you need to tackle stocks, options, futures, and more, all in one place. Chart your heart out with over 300 indicators. See opportunity differently with interactive curve analysis. Use backtesting to learn from the past and plan for the future. The platform is only the beginning of better trading. You'll also find low pricing, lots of education, and backup from a support team that really gets how traders trade. It's no wonder Investopedia named Tasty Trade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/podcasts and see for yourself. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.